Good morning, it's me, Kenny Polcari, and it is June 1st, 2022. We are now in the last month of the second quarter, almost 6 months through another year. And here are the things you need to know and what caused the market to kind of give back a little bit. The wall of comments caused angst and a multiple of mea culpas. We'll get to that in a moment. Joey had lunch with JJ and commits to leaving him alone, right? The Fed is an independent organization, nonpartisan. OPEC considers throwing Russia right out of OPEC Plus, and oil marches higher. And it's a new month. It's lots of new eco data. There's a June Fed meeting coming up in a couple of weeks. And then what do we have for dinner tonight? Well, it's summertime, so we're going to have the Pasta Fresca. We'll get to that at the end. So stocks just couldn't keep up, right? The Waller comments on Monday suggesting that that he would like the Fed to be more aggressive at every meeting until inflation is at 2%, casted a pall over the mood. I mean, inflation's running at nearly 9%, and he wants to hike by 50 basis points at every meeting until inflation gets to 2%. Well, good luck with that, because he'll be hiking into 2024, right? At the current level of inflation, it would take 16 meetings at 50 basis points to get interest rates above the current inflation rate, a move that needs to happen if they're serious about halting it, right? Reminiscent of the 1970s, 1980s. Remember what Paul Volcker did? They would be better off, in my opinion, if they just raise rates in 1% increments to see what happens, to shock the system and create a more dramatic effect. And by the way, I'm not sure that isn't being considered, in the back room, right? In addition, the Fed is getting ready to begin reducing the $9 trillion balance sheet today, and that's sure to add a new dynamic to the mood as they roll off $95 billion a month. No matter what they tell you, no one knows what that impact is really going to be on investor psyche, on valuations, on interest rates, because we're in a place we've never been before, right? So as we start to roll that off, the mindset could change. And then there was the rumor that the Saudis are considering kicking Russia out of the OPEC Plus alliance. Now, the plus in OPEC Plus is Russia, so it would go back to just being OPEC, right? Again, reminiscent of the 70s and 80s. The 15 member countries in OPEC include Algeria, Angola, Congo, Ecuador, Equatorial Guinea, Gabon, Iran, Iraq, Kuwait, Libya, Nigeria, Qatar, Saudi Arabia, United Arab Emirates, and Venezuela. Financial sanctions on Moscow due to the invasion of Ukraine are hampering Moscow's ability to pump more oil, and that, along with momentum, sent oil surging as it would force the Saudis to pump even more oil. And considering that they have struggled to replace the oil that they cut during the pandemic, excluding Russia in the alliance would only add more pressure to the Saudi engine and then more pressure to energy prices, right? So energy ain't going down anytime soon, so just be prepared for that. And then we had two, not one, but two mea culpas yesterday and a lunch date at the White House. First, Snow White, otherwise known as Janet Yellen, admitted on CNN that she was wrong on her view of inflation last year, saying that she made an incorrect call when she predicted the elevated inflation would pose no problems, would not cause any problem, right? She also admitted that she did not fully understand the pressure that supply chain issues had on the economy. And now inflation is just too damn high. Then Atlanta Fed President Rafi Bostic chimed in, saying that his comments 2 weeks ago about pausing in September should not be taken as a Fed put or as a September pause by investors at any risk, right? Which causes me to ask, if that's the case, why did it take you so long to clarify that comment? Investors had interpreted those comments exactly as a Fed put, as a September pause, which is what caused stocks to rally last week, in the last week and a half. It was all the business channels discussed. So why did Rafi appear surprised? It's a bit confusing to me, right, that he appeared surprised. Interesting that his mea culpa came after Waller's comments on what Waller thinks should be done to tamp down inflation, as the speeches that began today, and we'll hear more from the speeches that begin today with Jimmy Bullard, New York's Johnny Williams, and Cleveland's Loretta Mester, all members that support a more aggressive stance. And just FYI, Waller's not a voting member, but that's why you should pay attention to what he says, because they replaced Bullard with him to be the mouthpiece, to leak the ideas out into the public square so they can start to be discussed, right? Think deep throatish, right? Again, a reference back to the early 70s. And then the lunch date at the White House. Well, they gave Joey and JJ a chance to break bread. Remember, the Fed is supposed to be nonpartisan, right? So Joey made sure to tell us that he was not going to interfere with their critically important work and that he was prepared to give the Fed space they needed to do their job. This as Joey's ratings on his handling of the economy plunge as the cost of living represented by the CPI surges to 40-year highs with no signs of abating. In his Wall Street Journal op-ed piece yesterday, Joey spoke of lowering drug prices and the cost of childcare, and he talked about building more affordable housing to help ease inflation. Are you kidding me? How does that help the rising cost of energy and rising cost of food and the rising cost of housing right now? It doesn't. It's all smoke and mirrors, right? But in the end, investors took some of the recent gains off the table, right? After it was the end of the month. We had this rally into the last week of the month, week and a half of the month, so they took gains off the table. By the end of the day, the Dow gave up 225 points, the S&P lost 27, the Nasdaq gave back 50, and the Russell lost 24, while the transports gave up 145 points. On a side note, yesterday's action left the S&P exactly where it started the month. On Friday, April 29th, the S&P ended the day at 41.31. Yesterday, the S&P ended the day at 41.32. And if you didn't know any better, you would think, what's the big deal? The market didn't do anything all month. But you would be wrong. In fact, the market gave you unending days of agita, right, during the course of the month. So much so that there was talk of a complete total meltdown mid-month. Remember that? That capitulation? But it never happened. In fact, as you know, the Nasdaq, which was down more than 30% mid-month, while the S&P tested lower, dropping a full 20% from the November high, putting it in bear market territory, again, if only for a moment. And then it was over. It was over after the narrative turned more dovish, when Rafi Bostic made the Fed put September pause comments is exactly when you saw the bottom to the May sell-off, and then the rally started for the last week and a half. Investors also started to examine the daily Fed commentary, trying to decipher what the next move would be. They listened intently as JJ told us not to worry, that his commitment to fight inflation was his top priority, and that the economy was strong enough to handle the changing monetary policy. Now, in the end, it's comical, right? Because JJ and his band of merrymen are the ones that put us in this position. They lit the fuse of inflation and then walked away as it burned, putting us now where we are, at 40-year highs on inflation. And suddenly, the Fed and the White House are all concerned about inflation being out of control, right? Completely contrary to what they told us. And so it goes. So now we're in the final month of the second quarter, halfway through yet another year. And the action has been nervous and anxious, just as I thought it would be. And I don't think it's over just yet. So do not fall asleep, right? Because I think there's some more turmoil to come. Not a disaster. Economic data today is all about the ISM manufacturing PMI report. The expectation 54.5, that's down from 55.4. The S&P manufacturing PMI report, which is expected to be 57.5. The JOLTS job opening report, expectations of 11.3 million jobs available. We're also going to get the Fed's Beige Book, which details the economic activity across the 12 regions. Again, it's not a huge market mover at all. But it is a data point that, some analysts and economists and strategists choose to watch. I don't think it's really a big deal, but listen, it is what it is, and you have to, you take the data that you want to help you make decisions. U.S. futures this morning are trying to move up as trader types who took money off the table yesterday suddenly hit the reset button, right? It's a new month, so day traders start all over again in a new month. At 7 o'clock this morning, Dow futures are up 154, S&P's up 10, the Nasdaq and the Russell. The Nasdaq was flat, the Russell was up by 5 points. News that Timmy Cook is moving some iPad production out of China into Vietnam is causing Gigi to get mad. But it's a good move for Apple, and it might be the story that starts to be told by other tech companies as well as those ton of manufacturing companies that are there, right? Reliance on China has proven to be an issue for the global supply chain, and it took a pandemic for everyone to see that. So it's time to write a new chapter and become more inclusive of other nations that can offer the same capabilities. So we'll see how that goes. But I think that's going to be a narrative that we see. And quite honestly, it should be. The fact that we got so tied to China like that, the whole world, is obviously a problem. Morgan Stanley's Mike Wilson warns us that there's more downside to come, while Jimmy Cramer's taking the contra side, saying that the chart suggests it's going to be a profitable summer. Now, I'm going with Wilson on this one. The data is still too negative, and my sense is that inflation has not peaked. But I do not think it's the end of the world either, right? 3,800 on the S&P appears to be a level that buyers are willing to defend. And like I said yesterday, I would expect us to test it again in the month ahead, right? As we approach maybe the Fed meeting, we listen to what they have to say this time. And by the way, that doesn't mean I don't think there are no opportunities out there, because there are. You just have to look for them. Continue to look at value, energy, financial, and tech-specific sectors like semiconductors, artificial intelligence, and cybersecurity. The social media names, you do what you want with them. They're not for me. I'm not in them. It is what it is. Oil, which spiked as high as $119.42 yesterday, ended the day at $114.50. Still up, but down from the high. This morning, trader types are refocusing on the same data points. The EU ban, the end of China lockdowns, and the talk of kicking Russia out of OPEC are all taking oil up again this morning. It's up 2% at $116.70. JP Morgan analysts, are predicting that we could see oil prices hit $185 a barrel. I'm not sure if that's by the end of the year, if that's in 12 months. That would be, I guess we have to find that out. European markets are mixed. Yesterday we learned that the German inflation rate came in at 8.7%. French inflation was 5.8%, another all-time high. And EU inflation at 8.1%, an all-time high. The ball is now in the ECB court, right? The European Central Bank's court. So what do you think they will say? Because that's going to drive the action, then what happens across Europe. The S&P closed at 4132, right? As I said earlier. It tested 4100 yesterday, just where I thought it would find support, and it did. This morning's actions feels like they want to take them higher, but the jury's out. Lots of commentary to digest and lots of macro data to consider. The June FOMC meeting is on the 14th and 15th, so after Tuesday next week, do not expect to hear anything else from the voting members because they'll be forced to be quiet. But I am sure that we're going to hear plenty from the non-voting members. Think Waller and Kashkari, right? They're non-voting members. So they'll go out there and they'll float some ideas in the public square. Trendline resistance is now at 42.76, so it appears that 4,100, 42.76 is now the trading range. But with so much eco data due out this week, remain vigilant. Anything that suggests the Fed needs to move faster could see us test the May lows of 3,800 again, which I think we're going to do. A level that I think holds, though, but does need to be tested for a third time, right? 3 times is always a charm. That seems to be always what it is, whether it's on the upside or the downside. They test them once, twice, and then 3 times, and it either breaks up or breaks down. Okay, so what's for dinner tonight? We're going to have the Pasta Fresca. Now, this is a great summer dish, especially if you grow your own tomatoes, right? And it's easy to make. You can have it as a main course. You can have it as a side dish. You can have it with your summer barbecues. You can eat it hot. You can eat it cold. You can eat it at room temperature. It's very versatile, and it looks great when presented on a striking white dish because it's got the tomatoes and it's got the basil, all that stuff. Anyway, so you need fresh garden tomatoes. You need fresh basil, garlic, red onions, fresh mutts, grated Parmigiano, Locatelli Romano cheese. You need a pasta of your choice, so like a penne or a farfalle or mustaccioli work very well with this. So you take your pick, whatever you want. Essentially, you're making a summer tomato salad, and then you're putting it over the hot pasta, right? So you want to dice up the tomatoes, right? Not tiny, but you want to dice them up so you can eat them, right? Slice the red onion, slice the garlic, add the chopped basil, add chunks of fresh mutts, right? Cut it into bite-sized chunks, salt and pepper. You want a splash of water and a couple turns of olive oil, right? You can also add a bit of oregano, but not too much. Try it first without and then decide, because you can always add it. If you add it and don't like it, you can't take it away. Gavish? Okay, now prepare it, let it sit out and marinate. It's going to create its own juice the longer it sits. You want it to be room temperature when you mix it with the pasta. If you make it the day before, then remove it from the fridge and let it warm up for about 30 minutes. Now you want to put the pasta in your bring a pot of salted water to a rolling boil, add your pasta, right? Cook it for the 8 to 10 minutes. You want it to be al dente. Do not overcook it. You want to strain it, always reserving a mug full of water. Return the pasta to the pot, add a little bit of the water, and just let it soak up the water. Don't leave a puddle of water. Let the pasta soak it up first. Now take the tomato salad, put it over the hot pasta, toss it, Take a handful of Parmigiana cheese or Locatelli Romano, whatever you have, put it right in, toss that as well, put it in a big serving bowl. A big white serving bowl always looks great with this dish. And then serve it. You can either serve it, like I said, at your barbecue in the center of the table. You can serve it in individual servings. If you're having it for dinner, if you're having it for a main course, it's always great. If you're having it for a main course, just have it with toasted garlic bread, which is always great. In any event, the day's just getting started. It is Wednesday, June 1st, and until tomorrow, take good care.